Today's highest conviction chart, Nike Inc. The verdict is short. Don't skip ahead. The setup only makes sense once you see what's underneath it. Quick ask before the evidence. If these daily breakdowns help, subscribe, like, and share. It keeps them coming. Here's the route. Patterns and indicators first, then where the institutions are positioned, then the exact trade plan. 3 layers, 1 verdict. Let's move. Straight to the chart. Daily candles, the last 60 bars. Price action is in a downtrend of moderate strength. That's our primary directional bias right out of the gate. You can see the dotted lines on the chart. Green is our TP at $37.05. Red is our SL at $42.55. Those are the 2 numbers that matter most in this whole video. Now this is the fun part. The pattern detector picked up 3 chart patterns on the daily: double top, ascending triangle, descending triangle. I'm going to walk you through each one in the next slides and show you exactly where they formed on the price action. Pay attention to the labeled points. Those are the swings that confirm the pattern is real. Quick one before we dig in. If you're new here, the scan drops every single day. 1 tap. It's free. Pattern number 1, this is the double top. It's a bearish formation with 2 out of 3 strength. 2 peaks. $44.33, measured move target $37.04. You can see on the chart exactly where the key swings line up. That's what confirms the structure, not just my word for it. The textbook measured move projection is 7.5%. That's the typical decline once the pattern fully completes. It's a guide, not a guarantee, so we still need our SL in place. Pattern number 2, this is the ascending triangle. It's a bullish formation with 2 out of 3 strength. Flat resistance, $44.57 with rising support. Breakout upward expected. You can see on the chart exactly where the key swings line up. That's what confirms the structure, not just my word for it. The textbook measured move projection is plumb at 22.7%. That's the typical rally once the pattern fully completes. It's a guide, not a guarantee, so we still need our SL in place. Pattern number 3, this is the descending triangle. It's a bearish formation with 2 out of 3 strength. Flat support, 40 tables, Marnoir 3 rounds with falling resistance. Breakdown, downward expected. You can see on the chart exactly where the key swings line up. That's what confirms the structure, not just my word for it. The textbook measured move projection is 10.1%. That's the typical decline once the pattern fully completes. It's a guide, not a guarantee, so we still need our SL in place. Candle signal number 1, a spinning top just formed on the very last candle. See the dashed box on the chart? That's where it printed. It's a neutral read with 1 out of 3 strength. Small body with balanced wicks, bulls and bears in equilibrium. What you want to see next is follow through on the very next bar. That's the confirmation that turns a signal into a trade. Candle signal number 2, a bullish harami just formed on the last 2 candles. See the dashed box on the chart? That's where it printed. It's a bullish read with 1 out of 3 strength. Small bullish body inside prior bearish, selling momentum weakening. What you want to see next is follow through on the very next bar. That's the confirmation that turns a signal into a trade. Let's talk key levels. Every trade is really a conversation between support and resistance. On this slide, you've got 2 resistance levels above price, 2 support levels below, plus our TP and SL inside that range. If price breaks above R1 cleanly and holds it, that's the green light for the upside scenario. If it cracks below S1 instead, the long thesis is broken and you stand aside. The TP and SL aren't arbitrary numbers. They sit at logical inflection points, which is why this map matters more than any single indicator. On to the indicators. We've got composite score of 0.46, technical 0.33. Positive numbers lean bullish, negative numbers lean bearish, and what you're really looking for is agreement across multiple boxes, not just one indicator screaming. ADX is at 15, and that tells us we're in a weak trend regime. Important because some strategies only work when ADX is above 25. On-balance volume is bearish. That's a sneaky good way to spot whether the smart money is buying or selling underneath the price action. And now, the part I actually build the trade on. Retail signals start the idea. Institutional positioning confirms it. Let's bring in ICT and smart money concepts. On the daily chart, the SMC bias is bearish, with a ranging market structure. The most recent order block is a bullish zone between $41.58 and $42.60. That's where institutional orders are likely parked. We've also got an unfilled bearish fair value gap between $40.64 and $40.71. Price tends to revisit these imbalances. Most importantly, we just had a choch bearish move at $43.69, a key structural signal that smart money traders watch closely. Next up, volume profile. It shows where the heaviest trading happened, and those prices act like magnets. The point of control, the most traded price, is at $43.02. The value area runs from $38.86 on the low side to $62.85 on the high side, meaning 70% of all volume traded inside that zone. The signal here is bearish. Price $40.06 is below POSI, $43.02, but above VAL, $38.86. Bearish lean. Watch VAL as support. Order flow time. Net pressure from the last stretch of candles, buyers versus sellers. Over the recent window, buying pressure accounts for 46% of volume versus 54% selling. The overall flow signal is bearish. And to round out the indicator suite, 3 more advanced reads. Money Flow Index. The volume-weighted RSI reads 34, signal neutral. Williams %R is at 72, neutral. Chaikin Money Flow reads 01.06, bearish. Together, these 3 confirm whether the volume's actually backing the price move or whether it's just speculative noise. Fundamentally, this one's pretty in line with its sector. No screaming value or screaming overvaluation. That's actually fine. We're trading the chart here, not the company. Context check. What's the overall market doing? On this slide, you've got the primary trend, its strength, the ADX number, and the volatility regime measured as ATR%. Here's the thing. A setup that looks textbook in isolation can totally fail if the broader regime is fighting it. So you want to ask, is this trade swimming with the market current or against it? The 5-day and 20-day moves at the bottom answer that. News and sentiment are mixed right now. No dominant story pulling price one way or the other. When that happens, we just lean on the chart and trust the levels we drew earlier. Heads up, entry, target, and stop are 60 seconds away. Subscribe so you never have to hunt for the next one. Now the slide nobody on YouTube actually talks about. Risk management. On screen, you see the dollar risk per share, the dollar reward per share, and a position sizing table built around the 1% rule. The rule is dead simple. Never risk more than 1% of your total account on a single trade. So if you've got a $10,000 account, you're risking $100 max. And that decides the share count, not your gut feel. Get this right, and you can be wrong 10 times in a row and still be in the game. Get it wrong, and one bad trade can take you out. This is what you stayed for. The trade. We're shorting near $40.92. Target sits down at $37.05. Stop loss above at $42.55. Risk to reward, 2.38 to 1. That's the asymmetry we want. For every dollar we put at risk, we stand to make 2.38. Horizon, roughly 5D. That's the setup. One more time. This is educational, not financial advice. Markets are risky. Trade your own plan. Never risk what you can't afford to lose. Drop a comment. Taking this trade or passing, and subscribe for tomorrow's chart. So zoom out for a second. What we just walked through on NKE, That's a short bias setup projecting roughly 9.5% from here. And here's why it matters. Every piece we looked at, the chart structure, the candle confirmation, the indicators, the institutional order blocks, the volume profile, the order flow, they all stack in the same direction. When you see that kind of multi-factor agreement, that's when the highest conviction trades happen. Now, here's what you do next. If this breakdown earned its spot in your feed today, smash the like button. It actually moves the needle on whether YouTube shows you the next one. Tell me in the comments, taking it or fading it? Trade safe out there. Tomorrow's scan is coming. Same time tomorrow. The scan runs, one chart wins, and you get the full breakdown. Don't leave it to the algorithm. Subscribe and turn on the bell. See you in the morning.